Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar is slightly lower in the session on Friday after gaining more than 1% in the previous session and trading above the key level of 70 cents. After disappointing Chinese economic data weighed on sentiment, Chinese officials' manufacturing PMI slipped into contraction at 49.2 in July, while the non-manufacturing PMI also fell below expectations, highlighting continued weakness in Australia's largest trading partner and tempering demand for the commodity-linked currency. Meanwhile, this week's Australian inflation data showed further easing in price pressures, with the annual CPI slowing from 4% to 3.8%, reinforcing expectations that the Reserve Bank of Australia has greater flexibility to ease monetary policy if inflation continues to moderate. Firmer commodity prices helped cushion the downside. However, the softer inflation outlook limited gains. Elsewhere, the US dollar, which measures the greenback strength against a basket of six major currencies, plummeted over 1%, and from 101.30 to now 100, after the US second quarter GDP growth slowed to 1.5%, missing expectations of a 2.1%, while the Federal Reserve's preferred inflation measure, the PCE price index, eased to 3.7% from 4.1%. The weaker growth and moderating inflation reinforced expectation that the Federal Reserve could leave rates unchanged longer. Overall, though, the market has broken over that level of 70.15, so it does put a little bit of a bias to the upside and to 71 cents, but it will be a tough move to the upside. I'm a little bit skeptical, but still, keeping from the break, the bullishness is holding, given and seen from the technicals. Turning to the euro, well, the market also rallied on the back of the US dollar and now looks towards that region of around 115.5 to 116. I would say, though, that given the fact the market has proposed a break above 115.15, now looks towards 115.60 and then maybe to 116. But as I say, I'm a little bit concerned with that call. We have seen 3 bullish days. We might see a little bit of profit taking first before the initial run up. Dollar yen, whoa, a bigger candle comes into play considering the one we saw in April, May, and wiped out from 162 all the way down to its target of 158 and bounces. Now with my objective reached, not at 160 but 158, leaves me neutral. Let's see how it plays into the end of the week. Turning to sterling, and also an impressive rally and wiping out some of these losses, and now on track to about 135 as a target, and maybe see a bit of profit taking there as the market still remains a little bit nervous. But overall, quite like the way this has unfolded. So a small pullback before the next leg up. Turning to gold, well, we've got a monthly chart first of all. As we can see here, it's heading for its first monthly gain since February. And from that, let's see how it looks from the dailies. Well, we can see it's going sideways since the break of the trend. Any weakness, now we could see a little bit into the end of the week, but I still feel anywhere above 4,045, then we should expect to see still that 200 point. I'm looking forward to 4,200 and reassess. Finishing up with oil, well, the market is a little bit weaker. As long as we maintain above 78.60, the bull call is still to $83. A break beneath there would leave me neutral. Well, that's a wrap. Thank you for joining me. And as always, look out for the interest report. And I hope you enjoy the great start to the new weekend.